morning, good afternoon, good evening, depending upon whenever you are watching this video. Hello everyone, I am Professor Hitanshu Vyas and we will be doing a revision of paper 3, Cost and Management Accounting, a group 1 subject, 100 marks paper. The topic of this video is contract costing. So we begin now, and the moment I say contract costing, at that point of time, of course, I write it as contract costing, no doubt, but then you have to understand one thing, my dear friends, that there is one word hidden here known as construction contract costing. So this chapter, unless otherwise specified, is dealing with construction contracts. Now, there are various terms involved, small points involved. Easy topic, mind well. You have done this topic, you know it very well. It's a very easy topic. But then at the same point of time, this is a topic of small points. So we need to understand everything to begin with, and then of course after understanding the basic theory, we will go towards the problems. We will take up every problem's important point. With that we will do the revision of this chapter called contract costing. Now, talking about contract costing, small points, let us understand the terms which are involved and then move towards those points. Right at the start, the word comes into the question, contract. What is a contract? So as I said, in this chapter, the word contract refers to a construction contract. Let us take one example to understand this word contract and so many other terms. Let's say state government of a particular state, let us not name it, let us keep it simple. State government of a particular state wants to build a metro in its state. So it asks ABC Limited to build the metro. So now I can say that state government gave a contract to ABC Limited. And in this case, ABC Limited is known as contractor and state government is known as contractee, or in simple words, seller and buyer. So now let us understand this whole graphic in a simple words. A contract in this chapter is a big construction job undertaken by someone on someone else's behalf. So ABC Limited will do this contract on behalf of state government in my example, which basically means that now I can replace these someone terms with proper terms and now put a statement in front of you once again. A contract is a big construction job undertaken by contractor on contractee's behalf. But then contractor is not going to do it for free. He is going to charge something to contractee. ABC Limited will charge something to state government. Let's say the contractor asks for 1,000 crores from the state government, that please give me 1,000 crores for building this metro. So 1,000 crores in this case is known as contract price. $1,000 crores in this case is known as contract price, or in another words, selling price of the contract. So now I can modify my sentence, add something to it, and I can put it this way. A contract is a big construction job undertaken by contractor on contractee's behalf for contract price. I hope you are clear. A contract is a big construction job undertaken by contractor on contractee's behalf for contract price. Now, let's accept one thing. State government has got multiple things to do apart from looking at this just metro. So, they will need someone with technical capabilities to monitor this particular project. Let's say they hire someone known as XYZ Limited, who will monitor the progress of this contract. So, in this case, XYZ Limited is known as architect or surveyor. So now I can again change my earlier statement, modify it and put it something like this. A contract is a big construction job undertaken by contractor on contractee's behalf for contract price, and the progress of the contract will be monitored by an architect also known as surveyor. So this was the basic of all the terms, of course just the beginning. A very important sentence coming up right now, my dear friends, please listen to me. This entire chapter will be studied from the point of view of contractor, which means we will be doing the entries or preparing accounts or whatever accounting we call it in the books of contractor. It's very important for a simple reason. I repeat, it's very important for a simple reason. We are doing accounting, we need to have a perspective that from whose perspective this accounting is being done. Otherwise, you know, I know, both of us know that same person can be debtor, same person can be creditor, depending upon from whose perspective you are looking at. So it is very important for us to understand that this entire transaction is being recorded in whose books? The answer is contractor. This chapter will be studied from the point of view of contractor, which means contractor's income, our income, contractor's expenses, our expenses, and if you see it logically, for contractee, these all things are just expenses, isn't it? I mean, he'll pay something and he'll say that from tomorrow the metro will be mine or something like that. So that is the whole idea behind this particular point. To summarize, a contract is a big construction job undertaken by contractor on contractee's behalf for contract price, and the progress of the contract will be monitored by an architect also known as surveyor. This chapter will be studied from the point of view of contractor. So then what is the word contract costing meaning here? What does that mean? Answer. Contract costing is a method of costing used by the contractor to record transactions related to contract. Contract costing is a method of costing used by the contractor to record transactions related to contract, which means that he will use this method so that he can account for all the transactions related to contract. For this purpose, a separate contract account is prepared for every contract, and all the transactions related to that contract will be recorded in its own account. For example, let's say I have 3 contracts. One is in Mumbai, the other is in Delhi, the third is in Hyderabad. So I will prepare 3 contract accounts. Mumbai contract account, Delhi contract account, Hyderabad contract account. Whatever expenses etc. is being done in Mumbai, I will record it in Mumbai contract account. Whatever expenses etc. is being done in Delhi, I will record it in Delhi contract account, and similar will be done for the Hyderabad contract account. But then why do we prepare this account? What is the objective? What is the need? Why? Why? Answer. We prepare this account with an objective of finding profit or loss of the contract for a specific time frame, usually a year. See, in question you can get anything, that's a different point, but usually a year. So we prepare this account so that we can find out profit or loss of the contract for a particular time frame. See guys, try to understand. If you will understand this terms, no, most of the next accounting treatments will be automatically clear. Contract account is prepared, I repeat, contract account is prepared so that we can find out profit or loss of the contract for a particular time frame, usually a year. Contract costing is a method of costing which is used by the contractor to record transactions related to the contract. And for this purpose, a separate contract account is prepared for every contract, and all the transactions relating to that account will be recorded, relating to that contract will be recorded in its own account. The objective of this account is to find out profit or loss of the contract for a particular time frame. That's it. So this is the basic detail regarding the contract. Now, everything that I spoke, I will just put in front of you in one slide. Give me 1 minute. The slide is right in front of you and you need to read it. Of course, pause the video, read properly, and then we will go ahead. I will be invisible. I am back, and I somehow believe you would have read this whole part. If you haven't, still again pause the video, read it again, and then go through further. This is something which I wanted to explain regarding the basics of contract costing. Now, as I said that we prepare an account, we will go and we will prepare a contract account. We will take a basic idea of how contract account is prepared. Wait, let me get the board in front of you. The board is in front of you now. Let us try to prepare contract account. So, as I just said that we will start with contract account. I'll prepare contract account right in front of you. Give me a second. Obviously, I'll put it in front of you. Okay, so this is contract account. Obviously, it's an account, so it will have two sides, debit and credit. No doubt about that fact. Now, talking about contract account, it is an account on the debit side of which we record all the costs. That is the whole idea behind the word contract account. Now, wait. Let us understand few things regarding the cost elements of contract account. Let us proceed further. Let us extend it a bit in case the need arises. Need may arise. Let's use proper English. Okay, fine. Now, guys, try to understand. The first, see, you all are revising, so you know material, labor, expenses, etc., etc. So these are anyways the major cost elements of contract account also. But few things that we need to understand, please try to understand. First is materials. Any materials which comes onto the contract will be debited. Any material which comes onto the contract will be debited, and any material which goes out of the contract will be credited. Any materials which come onto the contract will be debited. Any materials which go out of the contract will be credited. Wait, Now, from what sources material can come onto the contract? So, the moment, as I said, material comes onto the contract, it will be debited. It can be transferred from stores. Stores means go down, warehouse, whatever word that you prefer to use. See, it's logical. If a contractor is in the profession of creating this buildings, etc., he'll have his warehouse where cement, etc., will be stored. The moment a contract starts, he can send something from there. At the same time, if the need arises, he can purchase something directly from the market. I repeat, he can purchase something directly from the market. And obviously, think logically. Let's say a particular contract does not need some sort of materials and another one of my contract needs it. I repeat, one contract does not need a material, but another one of my contract needs it. So at that point of time, what should be done? Very simple. That material will be transferred from one contract to the other. Example, let's say my Delhi contract does not need cement, but Mumbai contract needs it. So I'll simply say transfer it. Quite possible. So again, material transferred from the contract, from another contract. Various ways, in which material can come onto the contract. And very much at this stage, there can be material which can go out of the contract. And if you have understood from what sources it can come, I'm sure you understand to where it can go. It can be transferred to stores, or rather, shall I write a little better word, return to stores. Of course, it can be sold. And it can be transferred to another contract. Very obvious, I'm sure you understand. Like for example, if it's a Mumbai contract account in my example, then it will receive, but Delhi will send. So obviously when it will send, it will credit. So I can write the word transferred to another contract. And your favorite, I don't know how it becomes the favorite. I mean, the moment anything is spoken about material, we speak something like this. Your favorite, loss by fire or theft. As I said, I actually don't know why this becomes a favorite of a student. I mean, someone is losing some goods, there is a fire somewhere, there is a theft, but no, sir, what about loss by fire? What about loss by theft? I mean, what joy does this give? I don't understand, but fine, fair enough. You like it, so we speak about it. Goodness gracious. We still go ahead, guys. Pay attention. Now, since you have understood all of this, there is one very important point where I would like to draw your attention to. Please pay attention. Any material which comes onto the contract will be recorded at cost. And any material which goes out of the contract will also be recorded at cost, not at selling price. Why? Because if you remember, objective of preparing the contract account was to find out profit or loss of the contract. So if I record material coming in at cost, let's say for example 100, and if I record material going out at selling price, let's say for example 120, whenever I will calculate profit, my dear friends, whenever I'll calculate profit, at that point of time, that 20 rupees worth of profit will be included in my contract profit, or loss as the case may be. That's a different thing, but that will be included. That is not my objective of preparing this account. Preparing this account, the objective is what? It is to find out profit or loss of the contract. So my dear friends, I am too sure you have understood that we cannot do this. So we better record it at 100. Of course, some authors take a different view. They say that fine, you can record it at 120, but then record profit here 20. So ultimately, again, this material will be appearing at 100, same thing. So there are alternative views, or rather should I use the word, there are alternative treatments. You can do it, no problem with that. It's just that to simplify, we prefer to record both of them at cost. That's the only objective. There is no other objective. See guys, always remember, alternative treatments can always exist, which basically means you can take any treatment out of them. So I am trying to take the simpler one according to me. That's simply the idea behind this particular discussion. So any material which comes onto the contract will be debited at cost. Any material which goes out of the contract will be credited at cost. That is what is the treatment that we prefer to take. Now, that is regarding material. Now, next, of course, labor and expenses. Labor and expenses. Again, some other cost items, no doubt about that fact. So these things will be recorded over here. There is one more point. As I told you right at the start, there are small points in the chapter. I would like to draw your attention to one more point over here, my dear friends. Please try to understand. The contractor is creating these buildings or bridges or metro, in my example. He'll be certainly using big plants and tools and assets. JCB, just an example that I'm giving you. Multiple cranes that he might be using, so many things that he may use. We need to record that, no doubt. But how? How? Two different ways to record it. First, you can show the movement of the plant, that is purchase, sales, etc., etc., etc. But there is another way, which in my humble opinion is quite simpler, and that is to calculate depreciation. So we do not show movement of plant in this case, and we simply calculate depreciation exactly for the time the plant was used, and we debit it to the contract. I repeat, this is an alternative treatment. I'm sure you understood. This is an alternative treatment. I had to explain it. I have explained it. Choice is yours. But then, as I again repeat, in my humble opinion, this becomes an easier treatment. So we record depreciation, quite possible. But you can still show movement of the plant. I'm sure you are clear. Now, after knowing all this, let me come to a situation which is specific to the contract. See guys, contracts are a long duration jobs. I know, both of us know that very well. Contracts are a long duration jobs. And if contracts are long duration jobs, my dear friends, please try to understand, it will not get over in 1 year. At the end of the year, it will be incomplete. At least at the end of first year, second year. Depends. It can be incomplete for multiple years, but I'm just giving an example of 1 year, 2 year, etc. And since it is incomplete, we need to record for incomplete contract, and obviously when it becomes complete, we need to do recording for the contract getting completed. Two different recordings to be done. Presently, let us concentrate on incomplete contract accounting. Let us concentrate on those scenarios where contract is incomplete, and when the contract is incomplete, you will have work in progress at the end of the year. You will have work in progress at the end of the year. Now, the moment I write here work in progress, please try to understand. Please try to understand. Work in progress is divided in two parts, work certified and work uncertified. Guys, now I need to do a little discussion on work certified and work uncertified. I request all of you to concentrate it properly on this part of the discussion. Revision lecture, small discussion, I agree, but discussion is warranted, it's needed. Please try to pay attention over here, my dear friends. The idea behind work certified and work uncertified. What is work certified and what is work uncertified? Work certified, it is a work done by the contractor and certified as completed by the architect. Work done by the contractor and certified as completed by the architect. Whereas work uncertified means work is done, but it is not certified as completed by the architect. It is very important to know that both work are done. I repeat, both work are done. But the part which is completed will be certified by the architect. The part which is not completed will not be certified by the architect. But both work are done. So the part of the work which is done and certified, work certified. Part of the work which is done but not certified, work uncertified. Now, I'm sure you remember, but then again, I have to make you remember once again, even if you do. Work certified will be recorded at selling price. Work uncertified will be recorded at cost price. Work certified will be recorded at selling price. Work uncertified will be recorded at cost price. Very, very important point. And this entire point of discussion, I will put it in front of you in one single slide. Guys, I will record, of course I'll bring that up, but just listen. I'll record work certified at selling price. I need to find out profit at the end of the year. Profit or loss, whatever you may call it. Naturally, for that, at least one amount must be recorded at selling price. Work certified will be recorded at selling price because it is as good as work completed. And then I'll record it at selling price so that at the end of the year I can find out my profit or loss. Guys, give me 1 minute. I'll bring it up in front of you, the whole slide regarding this entire discussion of work certified. 1 minute. And this is the slide which I was talking about, shall I say. Guys, I request you to read this slide properly, pause the video, read it carefully. I'll be invisible. And I'm back. I'm sure you have read. If you haven't, as I always put it, drag it back, pause the video, read again, and then come with me. This is the whole idea regarding work in progress, work certified and work uncertified. Something very important that I wanted to tell you. And of course, we have reached at a certain stage in our discussion. Now we need to go further. So after understanding this work in progress and related points, I would now like you to go to some other points. Give me 1 minute. I'll get the board back in front of you. Please pay attention. The board is right in front of you. One more point I'll add. There can be, in fact, there usually will be some sort of material lying at the site of the contract. We can simply call it as by materials at site, which is nothing else but your closing stock. Now, guys, try to understand. What if I want to find the cost of work in progress? Now, some people call it as cost of work in progress, cost of work done, cost of work completed, cost of work certified plus cost of work uncertified. All different names can be used. I want to find out cost of this. So how do I find? See guys, it's pretty simple, and or in fact I may even use the words pretty natural, that I can use a very simple argument that by spending all this you have made this. Very simple. So I have put a red circle on material, labor, expenses, depreciation, etc. All those costs, I record cost on the debit side. I want to find the cost of work in progress, work certified and certified. So I put a red circle that by spending this, I made this. By spending this, I made this. Wait! Only point that I would like to draw your attention to is that some small change I would do in this. Guys, I agree that we record all the costs on the debit. I don't deny that. And naturally, by spending that, we will complete that work in progress, which I have recorded on credit. Only point. If you see on credit, material at site, material returned to source, material sold, material transferred to another contract, material lost by fire theft, everything said and done. These materials are not used on the contract. These materials are not used on the contract. In other words, they are not part of the cost. Let me take a very simple example for you to understand. Let's say I bring wood of 1000 rupees to make some sort of furniture, and I make that furniture. At the end, 100 rupees worth of wood is still lying with me. That was not used. Naturally, if someone will ask me, at what cost did you record, or rather at what cost did you make this furniture? My answer will be 900. How did I get 900? 1000 rupees for the wood. But then at the end, 100 rupees worth of material was not used. So I'll subtract. By the very same logic, my dear friends, the material which is unused on the credit side, the material which is unused on the credit side is not used in the contract. And because of that, I will have to subtract it while calculating cost of work certified. So what do? I simply, just for your understanding purpose, I will circle this with black for our understanding purpose, or let me make a proper circle to include entire material which is unused. So now, to find out the cost of work in progress, which is marked with maroon, what will I do? I will take the total of all the items which are marked in red, and I will subtract all those items which are circled with black. That will give me the cost of work in progress. That is cost of work in progress, cost of contract completed, cost of work done, cost of work certified plus cost of work uncertified. You may use as many names as you want, but you will get the cost of them by doing this particular scenario. To summarize, to find out cost of work in progress, I will take the total of debit. From that, I will subtract material unused, which is recorded on the credit. Material unused can be by any name. Material at site, return to source, sold, etc., etc. Total of debit minus material unused. And that, my dear friends, will give you actually the cost of work in progress. So this one point I wanted to tell you. Next point that I would like to get in front of you is this, that whenever this particular contract account is closed, obviously, as you all know, that work certified was recorded at selling price. So now if in this account, when I want to close, if credit is more than debit, there will be profit, and if debit is more than credit, there will be a loss. But then you got to understand one thing very clearly, my dear friends, very, very clearly, that the contract is not complete. So this profit or loss is not actual or real profit or loss. What we call them is notional. I repeat, we call them as notional. Notional means imaginary. Notional means imaginary. I repeat, notional means imaginary. Of course, it's a different point that both of them will be transferred to P&L account. But then this remains the whole idea behind closing these particular accounts. And before I go on to something else, one small point that I would like to discuss, guys, please concentrate. Naturally, as and when specific time frame ends, you will have to take some money from the contractee. Obvio! The present generation calls it obvio. Obvious. You got to receive some money. So you will naturally go to the contractor and will say money, 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 money. Now what contractor will do? He'll call his architect. See how much work is done. Architect will tell him that certain amount of work is done. Let's say 5 lakhs, just an example. In a very rare circumstance only, the contractor will pay you full 5 lakhs. Usual scenario, he'll pay you only some amount. He'll pay you only some amount. Remaining amount, he will keep with him to ensure full performance of the contract. What if you run away in between? So he will keep some money with him. He'll give you some money. The money which you have received, generally in simple words, we call it as progress payments received. As and when the contract is progressing, you keep on receiving some payments. At the same time, the money which is kept with him is known as a retention money. These are technical terms. Retention money. And guys, now, try to understand. Yes, you have received some money. You have not received some money. But when you receive a money, what entry do you pass? Naturally, money is being received from contractee. So you pass an entry called cash or bank account debit to contractee's account. Contract account does not get affected with this entire cash received part. Now, I spoke again multiple points. All these points I'll bring it in front of you in one slide. Wait there. The slide is right in front of you, guys. I request you to please read it. I'll be invisible. I'm back. Only point is that if you haven't read this, pause the video, drag it back, keep it, read it, and then join back me once again. Now, these are small points. We have spoken all about of them, and now after doing so many things, I feel like taking an example. I mean, you know, you are listening to me so well. So let me take few examples. Obviously, those examples will carry forward a few of my concepts, but then I'll just take those examples. Before I go on to those examples, just listen to me few things. Just listen to me for few things. First point, please pay attention. There is a possibility that there may not be work uncertified in certain scenarios. It's not a compulsion to have work uncertified. It's not a compulsion to have work uncertified. You may not have work uncertified, possible. So for that and for one more point, I'll take one example. I will have to get a screen in front of you. Wait. The screen is right in front of you. Guys, read the example, read the question. It says contract price is 3 lakhs. At the end of the year, 2/3 of the contract was completed and architect certified the same. Find out work certified and work uncertified. Try to understand, my dear friends. Contract price was 3 lakhs. 2/3 of that is certified. 2/3 of that is certified. So now 3 lakh into 2/3, 2 lakh is certified. And then at the same point of time, there is no other work done which is not certified. 3 lakh of contract, 2/3 is done, totally certified. Whatever done, certified. There is no work which is done but not certified. Hence, there is no work uncertified in this particular scenario. And the most common doubt, the most common thinking that people will have, oh, 1 lakh of work is work uncertified. No, sir. No, sir. Wrong, sir. Remember, what was work uncertified? Work done. Work done but not certified. 1 lakh worth of work is not done at all. If nothing is done, how can you record it? You can record something which is done. So something is done, you divide it into certified and uncertified. But if something is not done at all, how can you record it? So 1 lakh worth of work is not done at all. So it will not be work uncertified. It will be nothing. As and when that will be done, we may divide it into certified, uncertified, etc., etc., etc. So that, my dear friends, second point which I wanted to clarify. 2 points which we learned from this example. One, it is not necessary that every time there may be work uncertified. Whatever is done may totally be certified, quite possible. Second, whatever work is not done will not be recorded at all. That was one example. And second example is, reverse calculation of work certified, etc. Many times this is given in the question. So I'll just bring that up in my second example. Wait there. Second example is right in front of you, my dear friends. Cash received is 3,60,000, being 80% of work certified. Find out work certified and retention money. Guys, try to understand. The question says that cash received is 3,60,000, being 80% of work certified. What does that mean? That simply means that whatever you have received is 80% of your work certified. So in other words, if you do work of rupees 100, then you will receive cash of rupees 80. You have received 360, so how much work will be certified? Cross multiply and you will get the answer of 450, which means 4,50,000 is work certified. Wait, 4,50,000 is work certified. You have received 360. You have not received 90,000, my dear friends. You have not received 90,000. With this basically means that 90,000 is kept by him. I already told you that will be known as a retention money. And with this point, I complete the entire basic discussion of contract costing. Basic discussion, I said. There is some additional part that I want to discuss, but now I will be taking up few problems to understand before I go on to the next theory point to understand. As I said, just we will be moving to the problems now. So after understanding all this, let us move towards a few problems to understand small points of every problem. Give me a minute, I'll be bringing textbook in front of you. Just a second. And the textbook is right in front of you. This is the first problem. Now, the first problem, if at all you remember, I somehow believe you will, the very simple problem, nothing great. In fact, the only point that you need to understand was this one, that cash received on account was 3,60,000, being 80% of the amount on the surveyor's certificate. Surveyor's certificate is nothing else but work certified. So, of course, reverse calculation, and you might feel, oh, this is I have seen somewhere. But you are bound to see it somewhere. That was one of my examples, my dear friends. I've already covered that in my example. So nothing great, but point already done and sorted. Yeah, you might say that this is depreciation. A point to remember, 30,000 into 10% is 3,000. That is something that you need to understand. But nothing great in the first problem. And of course, with that, I finish my discussion of first problem. Rest everything is understandable, no doubt about that. Now I move on to the second problem, my dear friends. Please try to understand here. Railway contractor makes up his accounts, etc., etc. In this problem, what were the points that you need to remember? First point that you need to remember is that from here you can calculate depreciation. So 25,000 is the cost, 1,000 is a scrap value, and of course the life is 5 years. So this is 4,800, and you need to understand the plant was on the site for only 73 days. So you need to calculate proportionate depreciation. 4,800 into 73 divided by 365, and that is 960. What I would like to take in front of you as a point is that here some people might have a doubt. So total depreciation 4,800, remaining depreciation 960. Where the remaining part will go? Well, let me answer you. The remaining depreciation will be charged to general P&L account. The remaining depreciation will be charged to general P&L account. Same point, I can even draw your attention to something at the start that we did. Remember, profit on the sale of material. There also someone can have a doubt. Sir, where it will go? All those transactions which you don't want to record in contract account for the reasons known to you. There can be multiple reasons for not recording the particular transaction in contract. You will record all those transactions in general P&L account. If it's an expense, it will be debited there. If it's an income, it will be credited there. That's the whole idea of general P&L account. So here also remaining depreciation will be debited to general P&L account. Now, next point, of course, supervisor salary is 18,000 per annum. He has spent approximately 6 months on this contract, and when I say 6 months on this contract, naturally, so I will do a simple cross multiplication, that 18,000 is for 12 months. So for 6 months, how much? Of course, the answer is 9,000, and only 9,000 will be debited to contract account. And my dear friends, I'll mark something with thick brackets if you can actually pay your attention to. Look at this. If you actually pay attention, then you will again feel, oh, I have seen this somewhere. 3 lakh, 2/3 is certified, completed and certified. I obviously wanted to draw your attention towards this point. So I took that in my example itself. 2 lakh will be certified. There is nothing uncertified over here. And this is merely cash received. With that, contract account will not get affected. And 1 lakh worth of work, shall I say, is not done at all. So it will not be recorded anywhere. As I just again repeat, this was already covered in my examples. We now go ahead with the further explanation of question number 3. If you see this question, contractor prepares his accounts, etc., etc., and you go further, guys, try to understand over here. This question is very, very similar. Again, you can see a depreciation over here. So 2,60,000 minus 15,000 divided by 7 years. So 2,60,000 minus 15,000 divided by 7. So you get 35,000. But the plant was on the site for only 146 days. So now same thing again and again and again into 146 divided by 365 and so on and so forth. So you say 14,000 and so on and so forth. Things are recorded over here. As I just said, supervisor who's paid 8,000 per month. So 8,000 per month into 9 months, you can say, because the contract was started on 1st July. This is 31st March. 8,000 per month into 9 months, but he has spent only half, so you will record 36,000, blah blah blah. All these things are very simple to record, but somewhere where I would like to draw your attention to is this part. Guys, wait. Let me mark something with thick bracket. Please read this part. And now, if you read this part properly, it says that the contract price is 20 lakhs on 31st March 2019. 2/3 of the contract was completed. Wait. 2/3 of the contract was completed. The architect issued certificates covering 50% of the contract price. Contract had been paid 7,50,000 on account. You'll need to read this properly 2 or 3 times. I'll be invisible. And I'm back. I'm sure you did read that properly. Pay attention, my dear friends. Pay attention. The question says that 50% is certified, but completed is two-thirds. So now let us try to understand something wherein I would like to draw your attention to. Let me put this on a board so that it will make things easier. I'll need to bring the board in front of you. Give me 1 second. And there comes the board. Just a second, my dear friends. Please try to understand. Now, work completed 20 lakhs was your contract price. They say that two-thirds is completed. So when you do that, you come to 1333,333.33. But certified is 50%. So work certified. So 20 lakhs into 50%, 10 lakhs. So now completed is 1333,333, certified is 10 lakhs. So naturally your mind will tell you that that means remaining is work uncertified 333,333.33. And that, my dear friend, would have been a big mistake. You know this, I'm still stressing it. That would have been a big mistake. Why? Try to understand this, my friends. Try to understand this. This is 20 lakhs. This is 20 lakhs. 20 lakhs is your contract price. It's a selling price. If you take two-thirds of that, then even this figure is at selling price. If you take two-thirds, if you take two-thirds of 20 lakhs, it will be at selling price. If you take 50% of 20 lakhs, even that will be at selling price. Let me keep it simple. Let me give numbers. Let me call it number 1. Let me call it number 2. Let me call it number 3. You have calculated figure marked with 3 by comparing 1 and 2. If 1 and 2 are at selling price, even the third will be at selling price. So work uncertified is at selling price. My dear friends, work uncertified must be recorded at cost. My dear friends, work uncertified must be recorded at cost. So now you will have to calculate cost. I'm sure by now you have remembered the whole question. So I'll just make you remember, make you remember further, should I use the word. Let's keep it simple. I need to calculate total cost of work completed. How do I do? So naturally I'll take total of debit. From that I'll subtract material unused. So whatever I will get, material unused, whatever I will get will be cost of work completed, or as I call it, it is total cost of work certified. So now I'll do a cross multiplication. Cost of work completed, cost of work completed, this is work in progress. So if this is work uncertified, how much will be the cost? I will do cross multiplication and I will get my answer. That figure I will record in contract account. So this was a very important point from question number 3rd point of view. With that I finish my discussion of question number 3. Now we go to question number 4. Again, for that I got to bring the textbook in front of you. Give me 1 second please. And the textbook is right in front of you. Of course, you are given a trial balance and all sorts of things you are given. Attention is likely to be drawn by me. Please pay attention here. I would like to draw your attention. Should I use proper English as I say that? This is plant and tools at cost. and this is plant and tools at site. 2 plants we have. Now, I have already underlined something for you, my dear friends, in this question. Just pay attention to those points. Of course, I'll take it further. That's a different thing altogether. But the question uses the words cost of work done since a certification is estimated to be 1,600. Now, what does that mean? Some sort of work is done since a certification. Since means after. So, certification is done. After that, you have done some work. If certification is done and after that, if you have done some work, naturally it will not be certified. So, that 1,600 is nothing else but work uncertified. The language is such which requires you to think. It says that cost of work done since a certification. You have done some work, but after the certification. So, certification is over. You do something after that, naturally not to be certified. It will be work uncertified. Work is done but not certified. The next point, it says after the above trial balance was extracted on 31st December 2019, plant costing 3,200 was returned to the stores. My dear friends, after the trial balance was extracted on 31st December, this transfer is done. This transfer is transfer of plant to the stores. Naturally, from site, it will be returned to the stores. But this transfer is done on the last day of the year. This transfer is done on the last day of the year. It will have no effect on calculation of depreciation of current year. Next day, it might have, but we are not bothered. In the current year, there will be no effect on depreciation. So, in the current year, depreciation on plant and tools at stores will be on 5,200. In the current year, depreciation on plant and tools at site will be on 16,000. And naturally, the depreciation calculated on 16,000 is on plant at site. It will be debited to contract account. The other, I repeat, the other depreciation, that is depreciation which you have provided on 5,200 is on plant and tools at stores, will be recorded at general P&L account because it has no relation to contract account. And one last point, and for that I'll have to take you to the board. Give me 1 second. The board is right in front of you. Now, guys, please pay attention. My dear friends, please try to understand. What I am trying to tell you is this. In that problem, there was one point. It was regarding the presentation of contract in the balance sheet. So, naturally, when you prepare balance sheet like this, contract, work in progress, you will write here heading contract number 707, naturally on the asset side, because that is work in progress, that's your asset, at least so far. So you will write the heading as work in progress, work certified, and work uncertified. In fact, I can even give you the actual figures. 160, 1,600, total 160, 1,600. Now you have received some cash from the contractee. You have not given anything against it. You have received some cash, you have not given anything against it. It's an advance received from customer. Naturally, it should be part of the liability side, but I want to show it together with this. My dear friends, my dearest friends, if I want to show it together with the contract, I have to show it as a subtraction, because otherwise it's a liability. So less cash received from contractee. We have received 1,28,000. So remaining amount you will show in the balance sheet. Of course, there is another way to look at it. Surely there is another way to look at it, my dear friends. There is no doubt about that. That you have done work of 1,60,000. I repeat, you have done work of 1,60,000. So you should have received 160, but you have received only 128. So minus cash received is 128. So balance is 32,000, and naturally there is work uncertified 1,600. So total is 33,600. There is just another way to look at it, my dear friends. One more logic of the given treatment. But then these are the points of question number 4. With that, I finish my discussion of question number 4. Now, I would like you to take towards another concepts. Please pay attention. If at all your memory helps you, then you might realize that at this stage, the problem number 5 and 6 were related to escalation clause. Now, let me get that into the picture, escalation clause. For that, let us understand the real basics behind the need of the word escalation clause. Please let us understand that, well, as such, there are two major types of contracts. There are multiple types of contracts. I am more bothered with two major types of contract here. As I said, two major types of contracts. One is cost plus contract, and second is fixed price contract. Now, in case of cost plus contract, what happens? Try to understand. In case of cost plus contract, let me take an example to make you understand this. In fact, it will be easier. Let's say I am the contractor. I enter into a contract with Mr. A to build a building or whatever you call it, and he says that please build a building for me. Let this be a cost plus contract. So what will happen? I will keep on spending everything for him. Whatever I spend, I will keep on informing him. Of course, with proofs like bills, etc. And when the time will come for the payment, what contractee will do? He will naturally send me, reimburse me, pay me the cost which I have incurred for him. Naturally, because that cost was incurred for him, he will send me that cost. Let's take an example. Let's say that cost is 1 lakh. And he will pay me 1 lakh plus a certain amount of profit. Let's say 30%, we have agreed. So he will pay me 1,30,000. In this type of contract, what has happened is that I have incurred some cost. He has given me the cost back plus certain profit. So this is known as cost plus contract. In this type of contract, I'm not bothered with prices increasing of my materials, my labor, etc., etc. In simple words, I can call it as input. I am not bothered with the price of the input. I repeat, I am not bothered with price of the input, and because of this, I will not be worried at all with anything. Let the price of the input go up, I am going to get it back from my contractee. At the same point of time, my dear friends, at the same point of time, if you have heard me properly in cost plus contract, you would realize what I will speak in fixed price contract. Of course, in fixed price contract, if the cost of my input will keep on going up, but the price is going to remain the same, contract price is going to remain the same. Let's say 5 lakh contract price. The price is going to remain the same. What will happen? I will be worried with the increase in costs of input, cost of material, cost of labor, etc. Because cost will go up, income will remain the same, and this might lead to reduction in the profits. Forget all that. Forget all that. If the rise in the cost is too high, it may even result in losses to me. So I need to safeguard my interest. I need to safeguard my interest. And what will happen? What will happen? So I will go and request the contractee, sir, please understand the contract price will remain same. It's a long duration job. Prices of material labor might increase. Please pay me something extra. He'll say, no, don't worry, I'll pay you. But that's an oral commitment. I would naturally not prefer an oral commitment. So I'll request him, sir, we will create one paragraph and we will put that into the contract. That paragraph will deal with increase in prices. Increase in prices, in other words, can be called as escalation. And the paragraph put into a legal agreement, in other words, can be called as a clause, which means that paragraph can be called as escalation clause, which you are used to hear, the term which you are used to hear so much, escalation clause. That's why escalation clause is needed in fixed price contract. And my dear friends, now we move on to two problems, question number 5 and question number 6, regarding the escalation clause. So, my dear friends, now I will bring back the question in front of you. Just a second. The textbook is right in front of you with question number 5. Of course, that entire table is well understood. What I suggest is, I request you rather to read both the paragraphs below the table. Please make me invisible. I'm back. If you haven't read, as I always put it, drag it back, read the whole paragraph again, pause it, read the whole paragraph and come back with me. Now, the question says something like this: in the event of prices of materials and rates of wages increasing by more than 5%, the contract price would be increased accordingly by 25% of the rise in the cost of materials and wages beyond 5% in each case. Now, what I would like to tell you is this, that the next paragraph says, it was found that since the date of signing the agreement, the prices of materials and wage rates increased by 25% and 20% respectively. The value of work certified does not take into account the effect of the above clause. I would explain you everything related to material. I know this is one of the question where you, of course, are needing some sort of help. That is what I believe. Generally, you would like to remember this kind of explanation. So, I will explain you everything related to material. Then you try relating to wages. I'll speak the important point of wages. Don't worry about that. But to explain this, please try to understand. I need to bring the board in front of you. But before that, some small points to understand. In the event of prices of materials and rates of wages increasing by more than 5%, which means if the prices increase by more than 5%, then the contract price would be increased accordingly by 25%. Wait! If they would have stopped here, then what I would have done? I would have taken 5 lakhs plus 25%, and I would have written 6,25,000, as a contract price matter would have got over. But they are not stopping here. They are saying 25% of the rise. They are saying 25% of the rise. So when I say 25% of the rise, what I would like to tell you is that first our job is to find out rise in the price, or in another words, increase in price. Now, how to find out increase in price? Try to understand. Increase in price can only be found out when you compare original price and actual price. If the difference when you calculate in this, if the actual price, should I say actual price? If actual price is more, then the prices have increased. Well, in reality, the question has said that the prices have increased. Read the next paragraph. It says, since the date of signing the agreement, price of materials and wages increased by 25 and 20. I am more bothered with materials, so I'll put it this way. Prices of materials have increased by 25%. So that means if the original price was 100, the increased price is 125. That much is clear. I have to find the rise in the price. I will have to do this calculation on the board only, can't do it over here. Some amount of explanation is required. I'll bring the board in front of you in a second. The board is right in front of you. Pay attention. Original price and actual price, when you compare this, what you get is rise or increased price. As I again repeat, the material prices have increased by 125%. So I will take original price as 100, actual price as 125. Now we are given certain set of prices in the question, that is in the box. We were given certain set of prices. The question comes to us that what we shall do. The question comes to us what we shall do. Which are those prices, original or actual? Let us take a very simple example to understand this. Let us not rectify this, or let us not mug up this. Why? Try to understand why I need to do that. Because I just have to decide those prices are original or actual. Let's say if I decide those prices are original, so I'll write it here. I'll do cross multiplication. I will get these prices. If I decide that those are actual prices, then I'll do cross multiplication and I'll get original prices. So one decision will ensure the whole calculation becomes easier. So let us decide whether those prices are original or actual. Let's say I enter into a contract with Mr. A and he says build a building for me or whatever, and we agree that cement prices will be 50 per kg at present. I go to the market after 2-3 days of signing the agreement and I ask the price of cement. He says it's 60. Now I have no choice but to buy, because I need to start building a, what you call, constructing a building. Of course I was about to say building a building, then he would have paid more attention to that rather than the details. So I said constructing a building. Nonsense, pay attention. I just took the cement at 60 per kg, obviously brought that to the godown, put it there and recorded in the books at 60. Prices have increased. After 3 months again I went, I paid some money for cement, but at that point of time the prices were 70. Again after 3-4 months I went, the prices were 80 at that time. I had no choice at all points of time but to buy the cement, put it in godown and start recording those things in the books. So earlier I recorded at 60, then at 70, then at 80. which means the books are showing actual prices. Now, naturally, in the question I am given those prices which are appearing in the books, which means those prices are actual prices. And hence, we write here, if you look your question at this stage, material is purchased of 1 lakh. That's an actual price, no doubt. My only point, I can't write 1 lakh here. I have no choice but to take 1 lakh minus 25,000. I have to subtract 25,000. Sir, why 25,000 is subtracted? Why? 25,000 is a closing stock amount. 25,000 is a closing stock amount. I repeat, it's a closing stock amount. I have not used that. I cannot get escalation on the amount which I have not used for the contractee. He will not pay me. He will only pay me escalation on that amount which I have used for him. Let me take an example to make you understand. Let's say I go to the market, I come to know that the prices have increased. I buy cement at increased prices. Second time I go, again the prices have increased. I buy it at increased prices. Then I start getting worried that every time the price will increase. But what if I buy something at right now at bigger amount? No, more stock, because anyways it will be used. Remember here, just an example, of course, but still, my contract price is 5 lakhs. But I wanted to take the benefit of bulk buying. So I went to the vendor and I said, can I buy more cement from you in bulk? He said, buy as much as you want. And as a friend, I would like to advise you, buy it right now because prices are going to increase. Vendor says, this should be done. And now I'm thinking what should be done, because if he says prices are increasing, it's a trouble. So I decided to buy more price. I asked him that can I buy 1 crore worth of cement? He said, yeah, no problem. Take it. I'm a huge vendor. Don't worry. I'm a big vendor. I can give it at what do you call it? I can give it whatever you want. So I said, do one thing. Give me cement of worth 1 crore. I will gather the money and I'll pay. He said, no problem. You get the money. I'll give it to you. So I actually bought cement worth of 1 crore. But then I bought the cement of worth 1 crore and I debited in my contract account 1 crore. My contract price was 5 lakhs. The year ended. I went to him and I said, sir, escalation. He said, oh yeah, of course, escalation. We agreed on that at the start. Tell me on what amount I should give you escalation. So I just told him, sir, 1 crore. What? Wait, what? 1 crore? Sir, I purchased. No, I purchased. Arey, but my contract price is 5 lakhs. No, sir, but I purchased. No, you try to understand. I purchased it. So now pay me. His hands might meet my cheeks somewhere in the middle. Quite possible. He will simply say that I cannot pay you for what you buy. I can pay you escalation for what you use for me. Obvious. Precisely for that reason, my dear friends, I have subtracted here 25,000. I hope you understood from a very simple example. So now I will write here 75,000. And then I will do cross multiplication. So 75,000 into 100 divided by 125. So this is 60,000. And this is 15,000 naturally. This is rise in the price. But guys, now I would like to take you back to the question. Read the question. I need not show you. You have the question in front of you. Listen to me very carefully. The question says, rise in the price. That's great. 25% of the rise in the price. That's great. That's superb. That's amazing. But the question continues further. 25% of the rise in the price beyond 5%. Of course, the question has used the word that in each case, it means they are talking about material labor, both ignore that. 25% of the rise in the price beyond 5%. What does that mean? Whatever increases up to 5%, there is no trouble. Any increase above 5%, of that I will take 25%. Any increase up to 5%, no issue. But any increase beyond 5%, and of that I will take 25%. So I now need to find how much has increased beyond 5%. Now this is 25. Let me mark with red. It will be easier for you to understand it clearly. This is 25. I don't have a problem with 5. I will have a problem with 20. So what do? I simply do a cross multiplication. 15,000 and that is 25. I don't have a problem with 5, I have a problem with 20. How did I get 20? Naturally 25 minus 5, because I'm fine with 5. I'm fine with 5. I'm fine with 5. So when you do cross multiplication, you get the answer of 12,000. This is rise beyond 5%. And hence escalation is equal to 12,000 into 25%. 12,000 into 25%, and this answer is 3,000. Yeah, I know this was one of the problem which you probably would be waiting for to understand. Another point, or rather another way to solve this, I'll keep it simple here as well. You know that 15,000 has increased as against 60,000 into 100. 15,000 has increased as against 60,000. This is 15,000 divided by 60,000, percentage increases 25%. Now, as I just said, I don't have a problem with 5%. I have a problem with whatever is increased above 5%, and of that I will take 25%. So simple. Now 15,000 is 25%. I will divide that in two parts. I will divide that in two parts. First part will be up to 5%, and next part naturally will be beyond 5%. So I will take 60,000 into 5%, which will be 3,000, and this is 15,000 minus 3,000 is equal to 12,000. Now I would like to be invisible. As you just saw that 12,000 was there, 12,000 is beyond 5%, and let me write proper words for your benefit. That is it. Talking about labor. I repeat, talking about labor now. A very simple point that I would like to bring it to your attention, that talking about labor. First point, there is an outstanding wages, but you got to add it. See, you haven't paid, agreed, but you have incurred it for the contractee is bound to give you some escalation based on that. That is first point. Second point, don't forget increase in labor cost is by 20%. Don't forget increase in labor cost is by 20%. Don't forget that. Don't forget. That's a mistake which people make. And third, contract price, that 25% of the rise in price, etc. will be by 25% only. Labor has increased by 20%. It doesn't matter. The escalation will be by 25% only. And when you calculate everything right, your answer of labor, let me make it a little more clearer for you. Material escalation is 3000. Labor escalation will be 1563. Total escalation will be 4563. Total escalation will be 4563, and you will pass an entry for this contractee's account debit to contract account. That, my dear friends, was an important point of question number 5. Now another question in escalation clause, question number 6. I would like to bring it in front of you in 1 minute. Please wait. So this is question 6 in front of you. Now, contractors enter into long-term contract, 1,75,000. That's a contract price, of course, and reckoning the full actual consumption, material, etc. The contractor has claimed a final escalation price of 177,360. Final price of 177,360. I just underlined it. Let me do that in front of you once again. This is 177,360. Now, what was an important point here? The important point here was that we excluded actual quantity and actual hours from our discussion. We excluded that. I repeat, we excluded that. Why we excluded? This is because, as a matter of principle, if there is anything additional used by the contractor or any error in estimation by the contractor, usually will be ignored by contractee. Real life situation can be totally different, quite possible, my dear friends, wherein a contractor might be able to explain why he has used more or whatever. That's totally a real life situation. But as a matter of principle, we have to ignore anything which is actual, because here we will not know what is the genuineness of the claim. Naturally, that's why we excluded this. But then you have to understand one more thing. It's an escalation. Net escalation will be paid, my dear friends. If there is a decrease in the price, that will surely be adjusted. That will surely be adjusted. So now how to solve this? Pretty simple, guys. We find out increase or decrease. I repeat, we find out increase or decrease. So when I try to find out increase or decrease, 5 rupees is standard rate, 4.8 is actual rate. So 0.20 is decrease. 8 rupees is standard rate, 7.90 is actual rate, 0.10 is decrease. 6 rupees is standard, 6.60 is actual, so 0.60 is increase. Now at this stage, what is the total increase or decrease? 5,000 will be multiplied by 0.20, so 1,000 will be decreased. 3,500 will be multiplied with 7.90, or rather shall I say 0.10, so 350 decrease. And 2,500 will be multiplied with 0.60, so 1,500 increase. So net increase is 150. Same way, labor, if you will do, you will get the answer of 700. So total escalation, 700 increase, I might add, total escalation will be 150 plus 700 is equal to 850. And hence, this is what I wrote. I'll write it once again for you, my dear friends. Don't worry. Total escalation is equal to 150 plus 700 is equal to 850. And After that, so final price payable will be 1,75,000 plus 850 is equal to 175,850. Hence, price of 177,360 is not acceptable, not admissible. That's it. That was question number 6 in front of you. So, after ending question 6, to move to question 7 and of course for 8 and part of 9 also, we require some additional bit of theory. What? Try to understand. So far we were preparing contract account of the first year. Now, what if we wish to prepare for contract account of second and subsequent year? And so far we were talking about incomplete contracts. What in the year of completion? All that points coming up right now. Please wait a second. I got to bring some slides in front of you. That's the first point. What if we prepare contract account of second and subsequent year? We need to reverse certain items. Work certified, work uncertified and material side. All three appear on the credit side. They'll be transferred on the debit side. Closing stocks will become opening stock. So simple. So basically we can conclude that opening work in progress will appear on the debit side. Closing work in progress will appear on the credit side. And obviously closing stock will appear on credit. Opening stock will appear on the debit. Now, after understanding all this, second point that we need to understand is this. Let's take an example to understand that point. In fact, let's say you are making a 10-story building, 10-story, big one, long one. In the first year, you completed 2 floors, work certified 2 floors. In the second year, you completed 3 more floors. So, if someone comes and asks you, what is your work certified at the end of second year, then what will you say? You will say 5 floors, 2 plus 3. Exactly the same thing is written in my example. You will show 5 floors on the credit side in my example. First year work certified is 4 lakh rupees. Second year further work certified is 16 lakh. So you will show total 20 lakh on the credit side in contract account of second year. I would like to be invisible. And I'm back. I'm sure you read the example number 2. As I always say, if you haven't, drag it back, read the whole example, pause the video for that and come back and join with me. Now, after this, second point, that work certified should be accumulated. Third point, work uncertified should not be accumulated. It's logical. Let's take an example. Let's say you made 3.5 floors in the first year. Contractor made 3.5 floors in the first year. Architect came and he refused to certify half floor. I said, I won't do it. Do whatever you want. So 3 floors certified, half floor uncertified, fair enough. In the next year, that is in the second year, when contractor starts with the work, what will he do? Naturally, he will first complete that half floor to full floor. He can't start building something on that half floor. Building will fall. Okay. So he will start building that half floor. He'll make it first full floor and then he'll proceed further. Which in simple words would mean, my dear friends, that work uncertified of the previous year will be part of certified in the next year. The question of accumulation does not arise. You will only record work uncertified of the second year. And to explain this, I'll get one more slide in front of you. Give me 1 minute, please. The slide is right in front of you, my dear friends. First year work uncertified 75, second year work uncertified is 30. You will write only 30,000 in the second year's contract account. Don't get confused, don't get confused, don't get confused. Reversal will happen of both and material also. Reversal will happen for certified, uncertified, material. accumulation will happen for certified. Accumulation will not happen for uncertified. Don't get confused. Reversal will happen for all three. Certified to be accumulated, uncertified not to be accumulated. This is the summary. And now I move on to last piece of theory. Before we move on to another question, is what to do in the year of completion of the contract. I'll bring another slide in front of you. Give me 1 minute. There comes a slide in front of you. First, I'll refer to point number 1 and 3. First point, there will be no work in progress. That is neither certified or uncertified in the year of completion. Isn't that obvious? If the contract is completed, how it can be in progress? If it is in progress, how it can be completed? So in the year of completion, there will be no work in progress. No work certified, no work uncertified. And any profit or loss will be actual and not notional. It's pretty obvious, my dear friends. Contract is over. Now, how it can be a notional or imaginary profit? It will be actual profit. And then you pass an entry for sale of contract. Roughly, very roughly, very roughly, very roughly, I can say that the entry is quite similar to debtors to sales. Contractees account debit to contract account. You can't write sales obviously because you are not selling the goods. It's a contract. So contractees account debit to contract account. Even that entry is passed at selling price. Even this entry is passed at selling price. That is the point which I wanted to get in front of you, my dear friends. That ends this bit of theory. Now I move on to question number 7. So with this, we finished the theory of 1, contract account of second and subsequent year, and 2, the steps to be taken in the year of completion of contract. With this logic, now we move on to question number 7. But for that, I need to bring the textbook in front of you. Please wait. And the textbook is right in front of you. Of course, what you are seeing is a part of question 6 and 7. I will bring total question 7 in front of you. Now, question 7, I hope you remember, is a very easy question. Lengthy one, no doubt. We need to prepare the contract and contractees account for all the 3 years, no doubt about that. But then at the same time, we need to just discuss it, everything, and we go ahead. Pay attention. Of course, whatever is given in the box will be debited. That much you all know by now. It's a revision question. But then at the same time, something wherein I would like to draw your attention in the first year is on 2 points. First point, this amount of work certified is 1,20,000, out of which 75% is received in cash. So entry obviously is cash or bank account debit to contractees account. And naturally, it will be 1,20,000 into 75% is equal to 90,000. Now, after all this, once we have done this, that is one point. And second, if you can see, the work certified is received, work certified is there, cash received is there. Cash received will not affect contract account. I spoke that earlier, I repeat again, cash received will not affect contract account. But then apart from that, there is no other transaction in 2018. Directly we are given transactions for the year 2019, which basically means there is no work uncertified in 2018. That point I humbly believe you should remember. Next, then again some details are given which will be debited, etc. Then they have given cost of the special plant 1,20,000. My point is pretty clear over here that that's a special plant. We don't record plant, we record only depreciation. We'll wait till the time depreciation comes. Further work certified, further, the amount of further work certified is given to us. Remember, I told you accumulation. So we will have to accumulate this. So first year work certified was 1,20,000. Second year further work certified is 3,30,000. So this total becomes 4,50,000, and this amount will appear in contract account in second year, of course on credit side. Work done and not certified, which is nothing else but work uncertified, is 22,500. There is no earlier work uncertified. I know, you know, but there is no work uncertified. Even if it was there, we wouldn't have accumulated. Work uncertified cannot be accumulated under any circumstances. Then we are given depreciation. Of course, 1,20,000 into 25%, 30,000 is depreciation. And finally, materials on site, which is nothing else but closing stock. It will be on the credit side. With that, second year gets over. And guys, in fact, let me bring this back to you. Do not forget that in the second year, at the start of the year, work in progress from the previous year will be reversed and will be put on debit side. We have done this in the theory. It will be coming on the debit side. There is no material at site in the previous year, that is in 2018. Even if it was there, it would have been reversed. And that is the start. I did speak right at the end of second year that point to revise you so that it will stick in your mind and you are clear that yes, revision has to happen from credit, it will come on the debit side. That point I wanted to clarify. With that, I finish second year's discussion and now I move on to the third year. Again, whatever is given in the box will be debited. Not bothered with that. That all of us know. My major idea is this one. The general overheads for each year is this and wages paid during the year is this. My point which I'm trying to tell you is that general overheads is 5% of materials consumed and wages paid. The question is how to calculate materials consumed. Materials consumed means what? Materials used. I repeat, materials consumed means materials used. So how to calculate materials consumed? Let us go back to the start of the topic what I said. The material which comes onto the contract will be debited. Material which is not used on the contract will be credited. Comes onto the contract debit. Not used on the contract credit, naturally difference will be used. So how to calculate materials consumed? Any item related to material on the debit side minus any item related to material on the credit side, that will be materials consumed. And wages paid is given in the question, not an issue whatsoever. Don't forget, in the last year, general overheads amount is 3,900. One of the major mistake that people do over here is the debit. I repeat, on the debit side, there is opening stock because that is the closing stock of the previous year, which will be reversed. I spoke this point just some time ago. Work certified, work uncertified, and material at site will be reversed from credit. It will become on debit side. And that is opening stock. Many people do not take that into account while calculating general overheads of this year. I humbly request you to take care of this point. And materials at site sold, that will be recorded on credit side, materials at site returned. But then again, 75,000 is given as plant. So 1,20,000 was cost and 30,000 is depreciation for 2019. So 90,000 is value of plant in 2020. 75,000 is given. Reduction in the value of plant is 15,000 and generally we take this as depreciation. However, some authors, some accountants might be of the opinion that strictly sticking to the question says that 25% of depreciation on cost basis. So 1,20,000 into 25%, but into 4 by 12. So that amount comes to 10,000. So some authors, some accountants, some people believe that 5,000 is revaluation loss, revaluation profit, whatever nonsense that we can consider it. It is possible that some people believe that. See, these are alternative treatments, these are alternative opinions, different opinions of different authors. We can say whatever we want, but yes, there is some sort of controversy here. I would humbly like to stick to 15,000 depreciation, but controversies can't be ignored. There is a controversy, and that, my dear friend, is the question number 7 discussion. With that, I finish question number 7 discussion. Please don't forget this, that this is a long question, but a simple question. And once I'm done with that, now I would like to move to question number 8. I'll bring that up in front of you. I'll of course If at all you can still remember, this is the question wherein the major idea was to do debit credit. There is nothing else in this question. What I would like to tell you is read the paragraph which is now in front of you. See, you are given the depreciation, etc., etc., and then there is a second paragraph while the contract number so and so, so and so. I'll come to that in a minute. But then now pay attention to this scenario, my dear friends. You are given that information is as on 31st of March 2019. I want to decide debit credit. I will have to decide opening closing for that. Only then I can decide debit credit. Now see, we are told that it is 31st March 2019. So 1/4/2018 to 31st March 2019. Any amount on this date is opening, any amount on this date is closing balance. But I'm sure you will understand any amount on 31/3/18 is opening, any amount on 1/4/19 is also closing, my dear friends. So accordingly now we need to decide opening, closing, and then we will decide debit, credit, debit, credit, debit, credit. A point to remember: opening work in progress, opening material side will go on the debit side. I hope you will remember that. Obviously current year's work certified, current year's work uncertified goes on the credit side. And if there is an opening work certified, we accumulate. We all remember these points. With these points in our mind, we now decide debit, credit, debit, credit, debit, credit. Now, guys, let us be very clear on this count. Okay, let us be very clear. Look at these dates: 1/4/18 naturally opening, 31/3/19 naturally closing. But it's material at site, so it becomes opening stock, closing stock. You know, I know, you know, I know, we both know. Opening stock will be debit, closing stock will be credit. This is work certified as on 31/3/2019. Look below what I have written. Any balance on 31/3/2018 is also opening balance for me. It is opening work certified. Opening work certified. So opening work certified, obviously it will be debited. This is current year's work certified. This is current year's work uncertified. Both of them will be credit, credit. Let me write it little properly. Credit, credit. We all understand that. And of course, these all things are debit, debit, debit. The current year expenditures. We don't record plant. We record depreciation only. And we are told that that is 20% per annum. So that 20% per annum is visible in front of you right now. That, my dear friend, is it. This is the only question. Okay, it's just that 4 contracts are given, so you keep on writing everything on debit, credit, debit, credit, debit, credit sides. Last point that I would like to draw your attention to, if you can see the opening balances. Look at this: 1, 2, 3, 1, 2, 3. Opening balances are there. I repeat, opening balances are there only and only and only and only in first contract. They are not there in second, third, and fourth contract. What I am trying to tell you is that this means 723 contract was carried over from the previous year, only then it can have opening, whereas the other 3 contracts must have been started in the current year. So that is the only point which your attention can be drawn to. Now I will do something as a thick brackets just to draw your attention. Just pay attention, my dear friends. I request you to read that. I would like to be invisible. Hopefully you read that problem, or rather read that paragraph. If you haven't read that, then please pause the video, drag it back, read it totally. My point is crystal clear. The same thing which I spoke is written as a sentence. That sentence beyond a point has no bearing on solving the problem, but that is given. So I thought I'll just draw your attention and finish that part off. With that, we finish question number 8's discussion, my dear friends. And as I just said, we finished question number 8. Now we move on to question number 9. And I am sure when the moment you see this question, you remember that there was another concept in this. Of course there was another concept, there is no doubt about that fact, there was another concept. uh, First column is actuals, and everything debit credit debit credit debit credit, very easy. We calculate notional profit, nothing to remember in that particular part. But then this question is talking about estimated profit. Let us discuss little bit, let me remind you little bit about estimated profit, and after that I come to this question, speak about the important points, and then we end contract costing. But for writing this, I repeat, I need to discuss estimated profit. For that I need board. Give me a minute, I'll get board in front of you. The board is right in front of you. Now guys, pay attention. When I talk about estimated profit, this is basically estimated final profit. Let me write it this way, estimated profit. It actually indicates estimated final profit. What does this exactly mean, my dear friends? It means a profit which a contractor expects to make on the completion of the contract. Generally, let's say when contract is around 30% complete, what you call 70% complete or 80% complete, contract is yet to be completed but a very small part remains. At that point of time, contractor might like to know what will be the final profit on the contract. So for this purpose, he calculates estimated final profit. How to calculate estimated final profit? Very simple. We will pick up total contract price, and from that I will subtract estimated final cost. And that will be my estimated final profit. Question arises right at this stage. So how do you calculate estimated final cost? Please tell us. It's pretty simple, guys, pretty simple. Estimated final cost. First, let us take an example. Let's say I have incurred, by the way, wait, before that example, I'll just tell you what is estimated final cost. It is a cost which you may incur till the completion of the contract. It is the cost which you may incur till the completion of the contract, which means when the contract will get completed, what is the total amount of cost that you would have incurred is what is mentioned over there. Now, how to calculate? As I said, we'll take an example. Let's say so far you have incurred 100 rupees in all, and your accountant tells you that, sir, if you will incur 30 rupees more, your contract will get completed. So what is my estimated final cost? 100 plus 30, 130. What is 100? 100 is actual cost. What is 30? Further estimated cost to be incurred in future. So let us write that. How to calculate estimated final cost. How to calculate estimated final cost? So actual cost incurred till now plus estimated cost to be incurred in future. That's it. That's how we calculate the estimated final cost. And that's it, my dear friends. With that, this theory also gets over. Now, I would bring you back to the textbook and discuss little more points. Textbook is right in front of you, my dear friends. So, how to calculate estimated? Simple. Let's just talk about material, or rather how to calculate estimated final cost. So obviously I'll just take an example of material as I said. So I need two things: actual, estimated. Actual. Now you have issued 3 lakhs. There is closing stock of 20,000. So naturally materials consumed amount is 2,80,000, and and that is 2,80,000. Now estimated, the material amount is 5,50,000, and again there is material at site of 50,000. We subtract it, but closing stock of previous year will become opening stock of next year. So plus 20,000. With that, we calculate that 5,50,000 minus 50 plus 20, 5,20,000. And 8 lakhs. Same logic we make applicable to labor expenses, etc., etc. Of course, in labor there is what do you call outstanding at the end. So for that we naturally add, but outstanding at the end of the current year will become outstanding at the beginning in the next year. Same way, but little different point. In expenses there is prepaid at the end. Prepaid at the end of current year will become prepaid at the beginning of the next year. Corresponding changes will take place, and you will get actual, estimated, actual, estimated, actual, estimated of material, labor expenses. Then we talk about depreciation. So there is, as you can see, plant returned. To calculate depreciation, I would like to put the calculation on the board. Just a second, guys. The board is right in front of you. The plant is costing 1,50,000. Guys, you can't forget, the question says that depreciation must be calculated on 25% of WDV basis. Out of 1,50,000, some plant is returned, some plant is retained. Let us write the heading: returned, retained. You have returned 50,000 and you have retained 1 lakh. Don't forget, we are calculating estimated depreciation. Now over here, guys, please try to understand, please. This is cost as on 1/4/18 less depreciation at the rate of 25% for 2018-19 for 12 months. I have to do this because I need WDV. 50,000 into 25%, 12,500, and this is 25,000. This is 37,500. This is 75,000. This is WDV as on 31/3/19 or 1/4/19. And now I will have to subtract depreciation at the rate of, or I can, let me in fact highlight it by writing the word estimated depreciation. At the rate of 25% for 2019-20 for 9 months, 9 months, 9 months. Look at the question, guys. Look at the question. Look at the question, my dear friends. Please look at the question. The question says that the contract will complete on 20, or rather, shall I say, contract will complete on 31st of December. It's given in the question, my dear friends. So it will be for 9 months: April, May, June, July, August, September, October, November, December. So now we have to calculate depreciation for 9 months. 37,500 into 25% into 9 by 12. It is 7031. 75,000 into 25% into 9 by 12. 14,063. Of course, I can subtract. I will subtract. 30,469 and 75,000 minus 14,063. 60,937. My dear friends, I am not bothered with this 7031 depreciation because this is plant at stores. It is returned. But this 14,063 is plant at site. I am bothered only with this, and this becomes my depreciation estimation for this particular question. And with that, this answer also is discussed. My dear friends, with that I finish discussion of question number 9, and of course I finish contract costing. But then I must make you happy with something, the summary of the entire chapter. Give me 1 minute, I'll get it right in front of you. So as I just said, let me make you happy. Give me 1 minute. There is the source of your first happiness. Please go through, and once you are done with this, just a second, I'll bring something else. Wait. Voila, that is the particular summary of question number 7, 8 and 9. I would like to be invisible. And I'm back. Of course, with that we finish this video of contract costing. Stay safe, take care, and we will certainly meet for yet another video. Thank you so much, guys. Thank you so much.